to this now. States SA will release mining and manufacturing numbers this week, and these are regarded as important sectors in creating much needed jobs. But at the same time, there's a concern about the economic impact of the pending public servants' wage strike. So let's reflect and look at the economic week ahead with Investec Group Economist Annabel Bishop joining me this morning. Annabel, thank you for your time. Good morning.
Hi.
Let's talk about this. Those two sets of numbers I referred to, they will be released by States SA. Manufacturing and mining as sectors, quite important. We know that they do create jobs, but equally impacted by load shedding. I mean, what are your expectations from these numbers?
Yes, hi. Look, I think for mining, we're looking for a drop of about 4.5% year on year. We saw the metal prices drop by about 6% over September. And of course, we're talking about September's figures.
Yeah.
The precious, the precious metals prices dropped by about 4.5%. So I think, some of the concerns coming through, there's still lockdown restrictions in China. And of course, they're a key metal importer. There's obviously their COVID restrictions and the crisis in the real estate sector, which is obviously having a negative impact. And of course, if we look at the manufacturing sector, we think that's going to drop by about 5%. The manufacturing sector, again, for September, and that really showed quite a sharp drop down the APSA PMI. That's really a forward-looking survey that gives the sense of what September's likely to see, and that's because there was a sharp drop in business activity. But over and above that, if we have a look at the world global PMI, we also saw quite a sharp drop in the September survey, and that of course came through in the new orders and the export activity. So overall, there's quite a lot of global factors and some domestic ones as well, pointing to a slower month for mining and manufacturing for September.
Yeah, and what does that mean then? We're talking about September here for those either looking for jobs or those who have jobs, and unfortunately that could have impacted them.
So I think that's the great concern with the recession that's expected globally, and of course the knock-on effects for South Africa. Remember, South Africa is a key commodity exporter. The one good news, of course, is that we export coal as well, and the prices are still quite high for coal, and of course we're seeing very strong demand from coal as well. So if we get a surprise on the upside in the mining figures, it could well come from the coal component. The concern there, of course, is Transnet and its underperformance in terms of exports. But, for the economy overall, it's a key sector. With electricity production, those two make up industrial production. They fared quite well in the first 2 months of the third quarter. So, of course, it's the third month which is likely to see a bit of weakness. But as I said earlier, there's a global slowdown. And of course, it impacts us in terms of our exports.
Right. And well, I want to also touch on, a lot of news this weekend around, the World Bank giving South Africa 9 billion rand. This, of course, is to rather decommission Eskom's Komati plant. It's a loan, I understand. So what's your take then, particularly on the energy priorities of government at this point?
I think government does want to transition to renewables. I think, there is some dislocation between perhaps what happens with the department, what government's objectives are. But we can't look in the context of globally of climate change and the impact it'll have on South Africa if we don't transition. And of course, we've just talked about being a heavy industrial producer of metals, manufactured goods. And of course, if we want to export those, we'll need to show a greener, a cleaner way of using electricity, energy to obviously, make those exports ready to go out to the world. So of course, we find ourselves in a situation also as well as we well know, where we have insufficient electricity. And of course, these loans are intended to help repurpose existing infrastructure. And of course, from that perspective, it's positive. These loans typically also have low interest rates as well. And of course, it's possible to extend them if you need to. But it's really a drop in the ocean in terms of what Eskom really does need to turn itself around. We understand the debt component is going to be aided by government, and of course they're looking to take 2/3, about 200 billion, onto their balance sheets of the 400 billion. But of course the concern really comes around production.
Right, and with that point being made, we know that the economy right now crying for that energy certainty, Annabel. But also, I alluded to this earlier on, the pending public national strike, something to be concerned about. I mean, at this point, can it actually affect the economy quite severely?
Well, I suppose we've been here before and we've seen the effect. And, it tends to, we of course don't know the details, but if it's going to be very broad-based, if it affects refuse collection, how far does it go? Does it affect police, teachers, Of course, you do have critical services which aren't allowed to strike. I think, it's coming in the context of the recent budget that we had, the mini budget, and of course at the start of the year as well, with our Finance Minister, Enoch Godongwana, who's looking to cap the increase in the wage bill. So, you know, what you typically see with any strike is that the unions or the strikers go in with a high wage offer, the employer goes in with a low wage offer, it might be 3 and 12%, and they tend to, you know, meet closer in the middle, and that, you know, is probably where inflation is at the moment. Look, it's a difficult environment because we have a very high inflation year, inflation around 7.5%. It's expected to drop as we go through towards the end of the year, but again, there's uncertainty. We don't know what's going to happen with oil prices internationally, energy crisis in obviously Europe, and that of course is putting a little bit of upward pressure through now in the fuel price increase we saw in November. So all of these factors really come together, and it's going to make it a more difficult year for government to try and keep the wage agreement within the 3 to 6% target range. And, you know, that's really what the context is that the strike's taking place in.
Yeah, and just lastly, I mean, speaking of the strike, just in terms of context, to what extent did the last strike, similar to this one, actually have an impact, particularly on the consumer and the economy?
Look, I think, you know, again, it depends how critical the services are. And of course, you know, that is absolutely key. It does, of course, disrupt the smooth functioning of the economy. Of course, you know, you don't want children out of school. You don't want people unprotected because, you know, we would not imagine that we would get to that level where we obviously see that, you know, the police go on strike. But it can have some disruptive effects. Again, it just depends how very broad-based it is or not. Look, we do find ourselves in a situation where our economic growth is slowing anyway, both because of what's happening with the globe, and of course as well with the issues that we have with electricity, Transnet in South Africa. So we just don't need this on top of everything else. It'll add something to it, but it won't be as significant as, you know, load shedding has had an impact on South Africa for this year, which, by the way, we estimate has probably shaved about 0.3, 0.4% of growth this year.
All right, Annabel, thank you so much for joining in us on studio and sharing us, of course, your expectations or even predictions of what to expect with this economic week ahead. Investec Group economist Annabel Bishop joining us this morning.